Hello investors and future investors, welcome to the channel. For today's video, I'm going to show you that it doesn't matter the size of your portfolio, there is a trade for you. It does not matter what your thesis is on any stock, there is a trade for you. Now, if you're new to options trading or you're trying to use options in order to get some extra income, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to show you three different option spreads that's going to allow you to make consistent income. I'm also going to show you how to utilize these three income spreads, whether you think the market is going to be going up or the market is going to be going down, or you have a more long term outlook. Despite your portfolio size, despite your thesis, we're going to go ahead and get down and dirty with options, and then you're going to go ahead and choose what you think is going to work for you. Our stock of choice for today is going to be none other than Robinhood Markets, ticker HOOD. Now, let's go ahead and get down and dirty with options by going to trade Robinhood options down to the bottom in order for us to open up this option chain. Now, before we get into this video and these three different option strategies, there's always two requirements from my subscribers and also from my viewers. Number one is going to be always make sure to do your own due diligence before investing. And number two is going to be always make sure to have an exit strategy before entering any options trade. Now we got that out of the way. I just want you guys to know that if you guys need some help with options coaching, the link is going to be in the description. Now let's go ahead and get into the first option strategy that can be used. Doesn't matter what size your portfolio is. Now for that, we're going to go ahead to sell. We're going to go ahead to put, and we're going to choose our expiration date of June 15th, which gives us roughly 15 days or 2 weeks. Feel free to choose an expiration date that you think is going to work for you. I'm just doing bi-weeklies. This is merely an example. So June 6th it is. Now we're going to go ahead and we're going to choose our strike price, and the strike price we're going to be choosing is going to be below the current share price. Now the strike price I will be going with is going to be the $61 strike price. Let's go ahead. We're going to click into that. Now we're going to go ahead now and we're going to switch over to buy, and we're going to maintain put, and now we're going to choose our second leg for this option strategy. This is a two-leg option strategy. Now, that second strike price is going to be the one right below our previously sell put, and now that's going to be the $60 price. We're going to go ahead, we're going to click into this one, and then we're going to hit continue. Now, this first option strategy is going to be known as the put credit spread. Now, this is why the put credit spread can be used despite your portfolio size. Let's go ahead, we're going to hit review. And there you have it. In order for you to do this simple two-leg option strategy, you're going to have to leave a collateral. The collateral you're going to have to leave is going to be $100. I'm pretty sure most of you guys watching this video do have at least $100 in your portfolio. And if you don't have $100 in your portfolio, now may be the time to step your game up and sign up for one-on-one coaching. Now, when you do this option strategy, this is an income generating option strategy. So once you do it, you're going to be receiving money. The amount of money you're going to be receiving is going to be, let's round it up to $72. It's actually going to be $71.92. So when you do this option strategy, you're now risking $100 in order for you to make $72. In my books, that's a pretty good risk to reward ratio. But remember, you make your own decision for your own portfolio. No one is going to know the best thing for your portfolio rather than you. So the first option strategy that can be used if you're trading for small account portfolio is going to be the put credit spread. In order for you to see this option strategy in more detail, just go ahead and search the channel for the put credit spread option strategy. Now we're going to go ahead and we get into the second option strategy that could be used despite your portfolio size. Now, before I completely get out of here, remember the put credit spread is what's known as a bullish option strategy. So if you decide to do the put credit spread, you have to be of the mindset that the stock price is going to remain the same, is going to go down, not too much, but most importantly, you think it's going to go up. Hence, this is a bullish option strategy. Now, let's go ahead and get into the second option strategy that can be used despite your portfolio size. And for that, let's go ahead now to sell. And then we're going to go to call. We're going to maintain our bi-weekly options. But in this scenario, we're going to go ahead and choose our strike price above the current share price. Now, the price I will be going with is going to be $72 strike price right here. Let's go ahead. Let's click into that one. Now we're going to maintain our call. And then now we're going to go to buy, while maintaining our exact same strike date. We're going to go ahead now and choose our strike price above the previous first leg. This second option strategy happens to also be a two-leg option strategy. So we're going to go with the strike price of the $73 right here. Let's go ahead and click into that. We're going to go ahead and hit continue. And here it is. This is your second option strategy that can be used if you're trading with a smaller account. Now, this option strategy is known as the call credit spread. Once again, this is an income generating option strategy. So let's go ahead into review order to see how this plays out. So the main reason why you could use the call credit spread despite your portfolio size is because the barrier to entry. Like the previous option strategy, the barrier to entry for this is only $100. In order for you to carry out or execute rather this option strategy, you will need to leave a collateral of $100. Now, the call credit spread is also another income generating option strategy. So once you do this option strategy, you're going to be receiving $17.92, or you're going to round it up to $18. Now, this looks like a little bit of money, but like I tell most of my students, this is a huge return. You simply divide your $18 by your $100 collateral here, and that's going to give you an 18% return. 18% return is extremely lucrative. If you could do this consistently, you will grow your account portfolio exponentially. Now, this call credit spread is a bearish option strategy. The reason why it's a bearish option strategy is because whenever you decide to do this option strategy, you're of the mindset that the share price is going to go up just a tidbit, but not past your $72. It may remain the same, or the most likely result, you want it to go down. If that happens, then this trade is going to work in your favor. So the second option strategy that's going to work for anyone despite your portfolio size is going to be the call credit spread. Now let's go ahead and enter into the third option strategy, which so happens to be a spread as well. That's going to be useful if you're trading with any account. Now, before we get into the third option strategy, if you guys haven't yet, now would be a good time to go ahead and like the video, subscribe to the channel, and hit that notification bell. And let me know down in the comments below which one of these option strategy do you think that's going to be best for your portfolio. Let me know down below. Now let's go ahead and we're going to clear up these selections right here, and we're going to go ahead and jump into the third option strategy. Now, a quick reminder: the first option strategy was the put credit spread. The second option strategy, the call credit spread, and here goes the third option strategy. So now we're going to go to buy. We're going to go to call, and we're going to select our strike date. Let's switch up the strike date now, and we're going to be going to September 19th, which gives us 121 days to expiration. Let's go ahead and select that one. Now we're going to go ahead and we're going to choose our strike price. The strike price we're going to be going with is going to be the $50 strike price. Let's go ahead. We're going to click into that right here. Now, this is a buy option strategy, unlike the previous two. So in order for you to get into this option strategy, you're going to have to pay. The amount you're going to have to pay is going to be $19.20, or in the real world, that's going to equate to $1,920, because each option contract does contain 100 shares. Now, this third option strategy is known as a long call option strategy. Now, the mindset of having a long call is another bullish option strategy. The reason why it's a bullish option strategy is that you're of the mindset that the share price is going to continue going up, which is going to increase the value of this option and allow you to make income. Now, Now, for those of you guys who have made it this far, here's a bonus option strategy that you can use as well. Now, now that you have your long call in your portfolio, the long call allows you to control 100 shares of whatever stock you trade in. Now, if you are able to control 100 shares of the stock, that can be used as collateral for you to do other option strategies. So now that you have this long call in your portfolio, let me show you a bonus option strategy that can be used. So let's go ahead and hit sell. Let's go ahead and hit call. Then now we're going to go ahead and change our strike date once again. Let's go back to the exact same strike date of June 16th, which gave us 15 days to expiration. And now we're going to go up and we're going to choose our strike price. Now, be very careful with this one because you're using the long call as collateral. It's highly advisable that you go up on your strike price. Remember, the previous strike price we chose was a lot lower. Now I'm going with the $80 strike price, which have a way higher chance of profitability. And the reason for that is that you do not want to get a sign on your long call. Now, this bonus option strategy is an income generating option strategy. So that means you're going to get paid. So you're going to go ahead and you can select this right here. Now, in this case, you're going to be receiving 0.35 or $35 based off of your $1,920 you spent in order to acquire the long call. So there you go. You're going to be making consistent income. Now, this new option strategy of using a long call in your portfolio that you're able to secure and use as collateral, and then go ahead and then sell calls on it on a regular basis. This is now going to be what's known as a calendar spread. A calendar spread is another income generating option strategies. So there you have it. I have now given you 3 option spreads that can be used despite your portfolio size, and they're all going to be income generating option strategies that's going to allow you to consistently bring in income and grow your portfolio exponentially. Now, that is it for today's video. I'm curious to know if you guys have any questions about any one of these option strategies we portrayed here, or you have any questions about Robinhood, let me know in the comments below. Are you guys using Hood, or do you guys have Hood in your portfolio? Now, go ahead, like the video, subscribe to the channel, but most importantly, if there's anyone out there you think that's struggling to grow a small account portfolio, well, that so happens to be my specialty. Go ahead and share the video with them. I mean, it's only the right thing to do because we're going to try to help as many as we can get away from that 9 to 5 job. Now, until the next video, keep pushing your investments.